Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, September 27th, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we kind of have a little bit of case of the trading doldrums this week. Not a lot has been happening as far as actions we're taking, things we're doing. The stonks don't happen to be going up at the moment, rather relatively down, but we can't be drugged down too much. And so we're going to touch on two aspects. I'm going to talk a little bit about how I've been taking my morning coffee, and that's with a little bit of futures action with it to try to keep me a little bit interested, polishing up and trying to sharpen some of my price action. And Viper, don't tell too many people, but I think he's been dabbling in a little bit of pattern trading and taking a look at different patterns there. And those are kind of evil words or not something we're going to brag too much about, but it's what he's kind of experimenting with. And so we'll dig into that in this episode. But before we hop to that content, I want to give a shout out to our Discord, a link in the description below. You can click in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. You'll also find a link to thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and the ugly. Last, this is available in an audio format wherever you get your podcasts. So pick us up there, subscribe, let us know if you can't find it, and we will get it there. But let's hop to this week's content. Viper, I've getting kind of a little bit, I won't say bored, but I have kind of a bunch of premium plays out there, and premium plays don't really tend to come off the burner, let's say, as quickly when the market is kind of diving down, because when you're selling premium, you're really short volatility, and you're banking on that volatility to decline to help you make your premium back. Additionally, if you get a little bit of directional price movement in your favor as well, that kind of also expedites that premium decay, where you can then buy your shares back to close out your position for a profit. But when the market is sliding the way that it has been, you kind of have the slow motion premium selling, because not only is volatility kind of rising, but typically most of my trades are on the put side, selling puts, which basically mean they're slightly directionally biased for the stocks to go up or the equities to go up. If I think we're kind of in a neutral area, I'll also put a call side on to make it a strangle. But in both cases, the thing that's really working against me is when price falls, volatility typically rises. And when volatility rises, premium also rises. Now, I've got my theta decay kind of working, and so you get this kind of balancing act between that theta decline and the premium rising, where you just kind of sit in neutral in kind of a treading water standpoint. And it's real boring, because you're not gaining profits, and you're not ringing up winners. You're not really booking losers either, but you're also not getting that much closer to the finish line. And so that's really where I'm at with some of my trades and my environment right now. So I decided to try something new. So this new activity is really kind of, I've talked on this show lots of times about futures and how I love futures. And a couple of things that I love about futures are their huge leverage and size, because not a lot of price movement can gain quite a bit of profit or loss. And the other thing I like about them is they don't trade with the limited hours that equities trade. They basically trade 24/6. So they start trading Sunday Eastern time around 6 p.m. and then they pretty much don't stop trading until Friday at 5. And I mean, there's an hour break in the late evening or early evening, I should say, around 5 o'clock, where they all kind of halt and they come back online. But the reason that this is interesting is there's two kind of windows that I like to pick up futures and try to do a little bit of scalping. One of those is in the evening, usually around I think it's like 9 p.m., 8 p.m., 9 p.m., somewhere around there, which is effectively when the Asian markets come online. There's typically a little blip in volume spiking on the futures when that happens. But, I'm usually doing something in the evening. But where I've really been starting to come to, I don't know, my new experiment is in the mornings. So I'm kind of an early riser for my day job. I get real busy, and sometimes getting through emails and stuff like that is in the earlier hours. I don't mind getting up too early either, and the markets are there. So part of my morning routine has kind of been to go grab my coffee, come up. Before I crack open my emails, I spend about 15 to 30 minutes just kind of seeing what happened in the overnights as far as markets go, indexes, currencies, commodities, things like that. And I kind of noticed that about the time that I'm getting up and sitting in front of a screen, which is usually around 5:45 in the morning, 6 in the morning, something like that, there typically is an influx in volume in the futures. And what I've been trying to do lately is just grab a couple of quick scalps in that time frame. And when I say a couple of quick scalps, I'm talking like uber zoomed in, because the particular future that I've been poking at is the Russell future. And each one of those 1/10 of a point is $5 in price. So lately, the Russell's been, around 1,800. And so when we talk about $5 for a 1/10 of a point, if the Russell goes from 1,800 to 1,799, that's a full point, or 10 ticks basically of $5. So that's $50 movement. And what I like about that is I can put my trade out there during that time slot, and if I get a point movement or even a couple of 1/10 of point movement, I can close that out and have a nice, $20, $50. Lately, that's really been when the volume kind of comes in and the market really just kind of drops or the floor comes out, and we'll get like 5, 6, 7 points movement on the Russell. And so I've been trying to zoom into that price action, look for, movement on this 1 minute chart or these really tiny charts to find that same, here's a swing up, here's a swing down, we lost that. And I mean, these are talking like ripples in an ocean there. So it's a really small thing, but because there's so leveraged there, it doesn't take much to, be able to book lunch money for the day. So I don't know, Viper. I don't really have a lot of time during the day to do kind of swing trading and stuff with the market. I have kind of looked at swing trading on the market, but the thing I don't really care as much about for that is it takes a good bit of capital, and some of your price movement swings need to be a little bit bigger. And then, of course, when you need to cover more ground, you typically might have to wait a little bit more time. And with this kind of early morning stuff, as long as I keep my stops really tight to say, okay, I'm in here and I'm looking for, a 5/10 of a move or a 1 point move or 2 point move, and I'm going to stop out at 2/10 of a move against me or something like that. It helps me really kind of control or contain that oversized notional value of a Russell future. So yes, it's risky because if that thing would to take off, it'll rack up losses or gains relatively quickly at $5 every 1/10 of a point. But when I put the order on, if I have that stop right there, then I know my maximum loss is $10, $20 to that stop. And then I'm just looking for that price target of the 20, 30, 40, $50. And I just try to do a couple of those in the morning, and I'll say I'm a little bit better than 50-50, but not much. So still a coin flip, but it's giving me something to do while that premium is just in slow motion.
Yeah, it's interesting because I mean it's the kind of thing that I mean it was I don't know maybe a year ago even. I feel like there was another YouTuber that I had found, and then I mentioned it to you, and you're like, "Oh yeah, I watch him," and or not a lot, but you've come across him, and he was going over his morning scalp thing where he like gets on, does indexes for like a half an hour, you know, it hits a couple wins. I mean, there are losses in there too. Not every day is a win, but still like does that same idea of, just scalping really quick in the early morning before going to work. And the indexes in particular are so liquid that, you have that opportunity, tight risk mitigation, all that kind of stuff like you talked about. And I remember watching it of like, that's pretty great. Like I think that's a really good, good strategy because yeah, I mean, we all have day jobs. And there's a big time balance thing that I struggle with as far as the time it takes plays to play out. And I mean, in your case, waiting for those plays to play out, but also trying to be capital efficient, all that sort of stuff. So, the other interesting thing I think is like, because when you're playing with something super liquid like that and you see price action unfold crazy fast, I mean, it's a really good learning ground as long as you're able to keep a tight leash on the risk mitigation and stuff. And it's interesting because that's a big reason why I still do as much small account trading, leverage trading in crypto things, because it's that same idea, except I feel like I can mitigate risk even more. I mean, I don't think there's any issues with stop losses not getting hit or things like that. But in some of the crypto world stuff, like there is no more money to lose. Like if I place a $50 play, it's leveraged and that $50 is just gone if it hits my stop loss or whatever. But nonetheless, it's the same idea where like what I've gained the most from being in that highly liquid environment, 24/7 availability of it is that practicing and that fine tuning of the price action, depending on the amount of leverage, getting that quick hit lunch money kind of thing and be like, all right, that's good. Cool. That was a win. Let's walk away and focus on work and real life things. So I mean, I like it. I'd like to be more disciplined and direct, a morning routine, more disciplined like that, and just kind of focus on that area a little more than I do.
Yeah, I will tell you, it is very tempting to try to win back your losses. So there's been mornings where the first couple of the trades don't work out, and then I'm like, oh, wait, I can get it, just a little bit more. And so I'll say that's a little bit troublesome for me to do that. And then there's been multiple other mornings where I have my price target set, but it's not really set in the order book. And so I get to the price target, and instead of pushing, close position right there, so it's instantaneous, I'm like, oh, a little bit more. It's gonna go a little bit more. And so I feel like I'm getting a little bit of training in there as far as the whole stick to the plan thing, and do a couple of your scalps and walk away. If you walk away a loser that day, you walk away a loser that day. But trying to revenge trade it back is, let's say it hasn't worked out yet for me. And I just kind of keep putting little Post-it note reminders like, hey, remember 2 days ago? We don't want to do that again.
Yeah. No, and I think that's a really important point to call out, and we'll talk about it time and time again as far as emotions and trading and the things you don't feel until you're actually in the moment and doing it. Like, I mean, everything you just described, like it's 100% played out. Like I said, in some of this, swing crypto trading or high leverage crypto trading where you're like, man, that went so fast. It was bad. Like, I mean, even let's just give the benefit of the doubt and say it's a perfectly legitimate entry. All the signs line up and whatnot, but you lose it so fast. They're like, well, if I lost it so fast, then I could certainly gain twice as much just as fast. And, then we get into the whole casino mindset and gambling and very unhealthy patterns that are very easily to fall into and very much worth constantly reminding people to be on the lookout for, because it'll happen to anybody. It's just human nature, I guess. And so I know for me, I prevent it as much as I can by, keeping, like, since I'm on chain doing this stuff, like I keep a wallet that's just for this kind of stuff. It's only funded with what I'm, allowance, what I'm allowing myself to do that day. Whatever happens, happens. And it's a lot easier when you see nothing left to just walk away. So I just make sure that the gap from something to nothing is my tolerated loss, and then just suck it up and get a clear mind, because I will always trade better the next time with a clear mind rather than a gotta get it back mind.
Yep, for sure. But what have you been up to? I heard rumors that you've been dabbling in a little bit of pattern recognition. This doesn't sound like any of the shows we've recorded before.
Yeah, we're gonna lose a friend over this, I think. But yeah, so there was a new feature that came out in TradingView for their premium tier subscription. So it's like their highest subscription level. It's not where I'm normally at, but I had a big bank of credits for TradingView, basically because every Black Friday they do some crazy big sale. And I usually top up a decent amount of credit for them. So I was like, hey, if I test this out, because, all right, so the new feature was automatically recognizing chart patterns on a chart and charting it for you. And I was like, well, that sounds interesting. Like, so many times, like, the idea of pattern trading is obviously everywhere. But it's never automatically charted for you, let alone 7, 8, 9 completely different patterns and all that sort of stuff. So I was like, well, there's a long history of heated discussion of the validity to pattern trading, and what I'm going to just refer to as naked TA, which is like no indicators, no nothing. Like, you're just looking at the chart and you're grabbing a level and you're plopping down a line and things like that. So I'm just going to call that naked TA. And so there's, in the Discord, there's a lot of talk about how pattern is the bane of trading, and TA, learning that raw cheat TA is very beneficial and useful. And patterns are stupid, and patterns suck, and they're just lazy, to just really throw it out on the table here. So, and I'll be clear, I 100% agree with all the arguments against pattern trading. I've at least grown enough in my naked TA that I totally get it. I totally see it. There is absolutely nothing that a pattern will show you that good, solid TA wouldn't already know is happening or doing or things like that. So that's the big in defense of naked TA, and like, I think it's an incredible skill. I'm gonna keep doing it, but at the same time, I just paid. I didn't pay, but I'm burning my membership at a much faster rate in TradingView. So I wanted, we're all about experiments. So this seemed like a fun experiment. Like, let me just take a block of time and just really commit to these patterns and see if, just see how it goes. So that's the premise of it, of like, let's see what this is doing. Let's see if I can make at least enough money to pay for the subscription, because it's not available in the cheaper subscriptions. And that's actually a really tall order, because this is a really expensive subscription if I were to keep it. So spoiler alert, I'm probably not going to keep it, but it's a fun experiment. So let's take a quick look. I want to show it to you in action, and kind of how what I'm doing with this experiment, and how I'm trading it. So no surprise here to see the good old AVAX on the chart here. And what's been happening recently is pretty pretty droopy doopy. We're just down. And honestly, at this point,
we got to get to the $5. We got to get to the $5 mark so that people in the Discord can start buying up AVAX, right?
We do, and we are so close. So it's down, and just I don't know. I feel like everything needs to be a disclaimer, especially when we're in this realm of the hard hat area and everything like that. This stage of the market cycle, there's not a lot of reason to be here, in AVAX on an altcoin, unless you have a very clear, specific purpose, like Sprockets talked about, trying to accumulate amount of AVAX to do something utility with it, like validating and needing to have it at cheap prices for that. Just trading, I mean, at this point, it's pretty much Bitcoin or bust. Like Bitcoin, whatever. There's a whole market thing behind it, but Bitcoin is the leader. So just trying to say, don't feel like you need to go trade AVAX. But nonetheless, here I am, and I'm doing it anyways. And it's like, these are the worst charts in my opinion. We've seen it in reverse when we talked about Apple shares. Apple was doing the exact opposite, where it's just constantly up. And I say these are the worst because there's just, yes, you can dissect it. We have dissected it in the Discord. You can dissect it and find important levels. Obviously, the 1 hour is a little too zoomed in, the 4 hour. But when it's just a slide, I have a really hard time with my TA on that. By contrast, back here, where there was this big dump, and on this recovery here, I was actually nailing the TA. And I think it was because we had these clear pumps and then retests, and like things were just more volatile. And so I have no interest in a pattern over here. I was doing just fine with my naked TA. But when we just start this droopy slide, like it's just annoying to get a good TA read on it. So if we flip on this all charts patterns, and so this is actually going to list every single pattern that it sees. In the settings, I did tune it to say, all right, if a pattern has been satisfied, so you can see that a pattern is shown here with a target price. So I turned on a setting that said any patterns that have been satisfied, take them out. Like, I don't want to see that. We're done with that. So it showed here that we were in this falling wedge pattern. And what I've been doing was basically running the thesis of, all right, I'm not going to forget all my TA stuff, but I'm going to trade the pattern with the knowledge that I have of how TA works, because the TA is still happening, whether it's in a pattern or whether it's, wherever. And so that is to say, the foundations that we talked about on previous price action episodes still holds true. There's the identify your resistance, identify your support, identify your breakout criteria of what you need to gain to break out of a particular area of resistance, identify what invalidation is, identify, all those things we talked about on previous price action episodes. Have those identified. So all I'm doing here by putting the pattern on here is I'm just letting it identify my targets. I'm not, I'm not entering this, mid range here and going, hey, it says target is 990. I'm going to be so rich. I'm just going to put the house on it and wait for 990. Like, that's not what it's saying. Mid range here, you're still in this range. You're still going down. To me, what this is saying is the target isn't the target until you break out of the down pattern. So all this is saying is, when you're in a falling wedge, the probability is when you break out of it, here's a target, here's the current price target that isn't going to instantly happen, but price will move in that direction once you break out of it. So my thesis was pretty simple. I said, all right, let's use the chart. Let's use the pattern as my constraints for my trade. And this is going to be simple. Once we get near the top, I'm going to go ahead and wait to make sure we don't get near the top and push, break through. I'm going to wait for a rejection of the top. So like, kind of like what happened back here. If we zoom in, you can see we got up to the top. And then nothing happened. We went sideways and then we started falling. So that's a pretty typical rejection. We didn't even break through it. So there was not enough strength to break through it. Resistance overpowered and pushed it back down. So enter the short and then put a profit target near the bottom of the range. Definitely don't try to catch this knife. So put a profit target there and walk away. Don't look at it. Have your stop loss or whatever. And that was the thesis of just let this define my constraints. And then I'm just going to kind of ping pong the range here. Now, what is my invalidation criteria for the range? So before this most recent action that you see on here, which is kind of a spoiler alert for, breaking out, I was clearly defined. I said, all right, trend is down until, and we obviously don't know exactly yet, but my invalidation criteria of the downtrend was we need to break out of the pattern, but just that's not enough. Just like any price level, you can break out and lose it and keep dropping down. So I was like, we need to break out, we need to test it, we need to find support, and we need to start putting in higher highs. So that was my clearly defined before this recent action we see here even happened. I said, I'm going to play the pattern until we break out, then pause everything, let it confirm what it wants to do. And then let's start taking long positions, because at that point, potentially this 990 target is in play. So, there's patterns that might pop up as we get going here. But nonetheless, you can see we've broken out of that. And so the pattern stopped generating itself because we've technically broken out of it. So if I manually extend this pattern here, we can kind of see those fundamentals of a price action level where we broke out of it, we came back and tested it, and then we went up and put in a higher high. We came back down and have just tested it again. So now coming off of this, I want to see a higher high, et cetera, the rules of price action at play. As long as we see that, then potentially this 990 target is still the probability play. So that's my current thesis. That's how I'm treating it. And I hope you can kind of hear that it's not a blind faith. It's not blindly following it. It's leaning on it a little bit. And I'm still using things that I've learned in the naked TA realm that I think are irreplaceable to make, we say it all the time, it's a game of probability. It's never a game of certainty. Understanding that fundamental TA, I think, is paramount and absolutely the starting point. And if that's the only thing that you need, if you have that kind of brain where it's like, no, this just makes sense, I see it, I do it, it works, then perfect, stop there. Like, that's the holy grail of being able to properly read any chart and just make a play and have, tight stop, whatever, that's the holy grail. But sometimes you need a little bit of help with your understanding. And the last thing I'll say is we were talking before the show, and I kind of equate it to using ChatGPT to generate some code for you, where if you've never coded before in your life, spoiler alert, it's not going to get you very far to try to use ChatGPT to write a program. Like, it's going to spit out brilliant code, but you still don't know how to put it together successfully. And so I kind of feel a little similar here. The underlying TA, then this is just kind of nudging you a little bit, giving you a little bit of that support, and then you go off with it. So, but we're early. I just started this 2 weeks ago. Maybe this starts blowing up and I just got lucky. That absolutely happens. So we'll see if it maintains or not. But for now, it's an experiment, and it's what we do, I guess.
I think it's a worthwhile experiment to go down. And I think it really is just builds on the same principles that we've always talked about on this show. And that's really understand the mechanics of what's going on under the hood. And I really think that's effectively what your price action is that's the mechanics that are going on under the hood. And this is just kind of a tool that, brings some of that underlying things out. If I was to try to think of a parallel, two parallels come to mind, analogies, if you would. I think of like a craftsman somebody that builds woodworking things with their hands. And I actually think back in my own people I've known, my grandfather, my great grandfather, things like that, right? They were these woodworkers. They would make furniture. They would make all these things. And my great grandfather would have a lot of hand tools, right? He had drills that you put this one end of it in your gut, and then you like kind of spin this thing, and it turned a drill bit to basically drill into wood, and then came along the drill press, right? And you can kind of drill things out with, more mechanics, more efficiency, things like that. At the end of the day, you could take either one of these guys and the stuff they could put together and all the tools in the world. I still don't know how to build something out of that, right? I think it's that skill that you learn is that there's underlying mechanics that if you don't grasp that, there's not any amount of tools in the world aren't going to fix that for you. If you do know the underlying mechanics, the tools will make things easier. They'll make things more efficient, but they're all built on the same fundamentals. The other analogy, which I think could also be closer to this, is I think one of the criticisms that we've heard about pattern trading and things like that is a lot of those patterns are backwards looking, meaning they only exhibit themselves once the data has passed, and they're not really, nothing is an indicator of the future, but most of the patterns are never an indication of the present. And I think that is where a lot of people start to kind of differentiate or have differing opinions on pattern trading versus, live price action or naked TA as Viper referred to it. The analogy that comes to mind here in my brain is more of your meteorologist. So a weatherman has multiple models that they view before they come out and they give you a forecast. Now, I get it. It's kind of looking forward and stuff like that, but they're taking in different models and suggestions, and they're not blindly just grabbing the model and barfing out what the model says as their forecast, right? They're taking that, they're contextualizing that with their own knowledge, their own experience, balancing that with other models' inputs, right, to deliver the current and present forecast in that moment. And it's not a direct translation of whatever was barfed out of a computer model. It's kind of, I need to understand how these models are generated so I know that when a model is more prone to, false positives or things like that, to know to back off of the reliance on that model and maybe look somewhere else. And so I think it just goes to that experience of the underlying fundamentals of what's going on is just really emphasizing it. So I think as long as you keep that frame of mind and that understanding, I really don't see a lot of harm or danger in this at all. If anything, it maybe will help you, or maybe it'll say, hey, I don't need this monkey business for this extra money. I'm just fine with honing in my naked TA, as you called it.
Yeah. And there's just a couple along those lines, a couple things that I wanted to point out, because it's not, the whole backwards looking thing. There's something that I'm very much working through how to contextualize. If we take a quick hop back here, this was a very real point in time. There's a little bit of a mess going on here, where all of a sudden, and this is partly a mess because I told it to tell me all the patterns it sees. So some of this is a self-induced mess. But this is like, if you wanted to focus on one pattern, then just filter it to that or whatever. But I was like, this will be interesting if I just turn on everything. And then, like I said, kill anything that's already been met. So, I don't have exact thoughts. I have some thoughts, but we don't need to get into it now. But I just wanted to show like that whole like forecasting model thing, like this right here, like when we hit this kind of moment where like there's targets up here, there's a double top, there's a reverse head and shoulders and a falling wedge. Like there's all this stuff together. What the heck's going on? Maybe part of the thesis is that means it's too choppy. We don't know, that sort of thing. And the last thing I wanted to show real quick was a particular pattern that I've seen show up on some day traders before, like, and this is kind of for your scalping, I guess. It's this rectangle, which sounds stupid, but there's this rectangle pattern that shows up, and I forget where I saw it. It was a while ago, but it might have been that guy that was just day trading and scalping in the morning or whatever. But this pattern, this rectangle pattern shows up. And one thing you might notice is like it puts a target way far away out of here. Like, I mean, this was at $13.73 and it put the target way down here at $5. But the main point, forgetting the target part, the main point I wanted to call out was when I saw him trading this, like he specifically called out this pattern and he specifically did not take a trade, and he was just zoned in on this exact pattern, and he did not take a trade until he saw the rectangle starting to form, and then he jumped on whichever end of the rectangle was about to drop out. He would open a short or a long depending on where it was coming out, because a big move was coming when it got there. And so obviously anecdotally that's exactly what happened here, but we also haven't hit the magical $5 that has become lower in the Discord. But it was interesting that on the daily, it calls that out. It says, hey, get ready, guys. $5 AVAX. It's coming. But anyways, that was just to show, like, it can be really messy. The charts, when you have all the charts listed, and I'm still working through if that's even helpful. If there's a way to contextualize that, that's, and I think that's fun for me. Maybe it's not fun for anybody else. Maybe I'm weird. But just wanted to show it's not always as clear as that falling wedge. But, there you have it.
So that brings us to the end of this week's episode. If making money trading were easy, then everybody would do it. And, there really is no absolute correct way to do it or absolute wrong way to do it. One of the things that really helps is just that inquisitive, mind to really kind of question things, really kind of look into things, experiment with things. Don't stray too far away from the fundamentals. Always keep the fundamentals in focus. Make sure you understand the fundamentals, because it's those basic laws and principles and fundamental building blocks that will help you kind of make sense of other data points, other strategies, things like that. And understanding those fundamentals and will let you kind of experiment on stuff that I'm doing where, I keep that core strategy of premium selling alive, but sometimes the environment necessitates that it's too slow and too boring that I start honing and sharpening different trading vehicles and different trading mechanics. And it's that type of stuff, that variety, that keeps you interested in the markets. And as long as you're interested in paying attention, then you'll kind of be aware. And it's all of that awareness and understanding that helps drive success, or at least familiarity. Nothing is ever a surefire way to success. Like I mentioned, if it was easy, everybody would do it. And then lots of things probably wouldn't get done in the world, because if everybody just sat and did the trading, then all of the people that work in the companies and facilitate the businesses wouldn't do the thing for traders to trade. So it's one of those things that it's kind of interesting when you think about it at a meta level, I guess. That's where we are. That's the stuff that's kind of keeping us trying to be engaged right now. Is the stonks don't seem to be going up. Maybe someday soon they will. I guess there's always hope as the winter time approaches and the mythical Santa Claus rally may or may not come. But that remains to be seen as we move on. So hopefully you can find something that interests you and you have luck out there and you're striking something that you're interested in and excited about. And always remember, think outside the block.